I'm Jarrett Carpenter. This is Future Signal, and back on the podcast is Jon Ruth. Jon was on episode 101 of what was More Than Blockchain. This is now Future Signal. Most people who are watching this know that I've rebranded. Here we are again. Jon is back. Last time when Jon was on, we were talking a lot about crypto development work and the work he was doing at the Solar Foundation. This time, I think we're going to talk about some of the other work he's doing out there with tech and doing good. And we're also just going to catch up on the world because it seems like if you're into doing good right now, it's quasi under attack. So that's kind of where we are. Jon, thanks for hopping back on. How are you?
Oh, I'm doing great and really happy to be back on the pod and excited to learn a little about the rebrand, but check out all the things you've been into and talk a little bit about everything I've been up to in the last year, a little over a year. So great to be back.
The time has flown. Yeah. So the first episode you were on, we were just saying this off mic, but it aired on November 15th, 2023. And at that time, you're right. We were talking about Bitcoin. It's like, oh, is it going to run? Because it was like low 30s. And it eventually did run after January 10th of 2024, which is when the Bitcoin ETFs, 11 Bitcoin ETFs were basically approved and then launched. Or I think they were approved that day. Maybe they were, the next day they started trading. Either way,
right.
It seems crazy. And, this isn't a Bitcoin only podcast, even though people who know me know on the spectrum of maximalism, I'm closer to Bitcoin maxi than not. But it's interesting because much of the doing good right now, once you get away from like Bitcoin mining, and I'm not sure if you know, I feel like you probably know what Gridless is doing in Africa. There's not as much like doing good. I see more doing good on other chains. I see more doing good in Ethereum, obviously, USDC, any of the stable coins. And now I'm just kind of blabbering. But all that's to say, a lot has happened since you were last on and since we last have talked.
Yeah.
Where do we even begin the conversation? Because I kind of maybe want to do an update in the Solar Foundation, but you know.
I mean, we certainly could start there, and then we focused a lot on the first episode on the Solar Foundation, but it'd be great to get any new listeners and things that haven't heard about the Solar Foundation, at least a little foundation about the foundation. So maybe I can just tell you a little bit about that. So now the Solar Foundation, we've been around for nearly 3 years now. We've funded a dozen projects in mostly in what we call the Global South. Some people have mixed feelings about that label, but it's kind of hard to put a label on anything these days and not piss somebody off. So, but that for us means that we have done projects in Tanzania, Kenya, Uganda, Nigeria, and Puerto Rico. And so most of those projects are small scale projects on schools, healthcare facilities, and community centers. And most of that has been just charity work. And that's, it's very fulfilling and really great work. We've always called ourselves like a Web3 centric nonprofit. And to date, a lot of that has just meant that we don't have a bank account. All of our money's in a Gnosis safe. We send all of our money via crypto to partners. We've had a couple partners that we couldn't quite get onboarded and comfortable enough. So we have a couple times done some conversions to fiat, but for the most part, totally crypto centric in our fundraising and our giving. This year, I'm really excited, and I think some of the things to note for the listeners out there and that are kind of exciting developments in what we're working on. We have developed what we're calling a solar saving circles. And so for anybody that's maybe in development work or spent time in other parts of the world, you may be familiar with saving circles. They sometimes have other names, like in Eastern Africa, it would be called like a chamas, or Nigeria's isusu. And what it is it's basically a group of people in a community that are generally unbanked, likely don't have any identification, have no credit score because there's no credit systems where they are. They just have no access to financial systems. And so long before crypto, there have been these groups of people that come together and share money together. And so they almost create their own little micro banks or micro economies amongst this group of people where they are saving into a shared savings account, and then that allows them access to borrowing funds as well. So they own a few shares in what we're going to be developing is really a DAO at the end of the day, is rolling out DAOs, because really that is, in a sense what they're already doing, but they can have some shares in a shared savings account and then borrow money against that and pay that back. And they're creating then reputation within those small communities. So if I borrow some money and it takes me a year to pay it back, next time they might not give me as much money, or they might not, the group might not agree to give me another loan, but we might have another person in the group that borrows every month but pays it back in 30 days. And so those people, the group's obviously going to, lend money to them all day. So it creates these really unique little, really micro economies and micro banks where people are saving together. And so we are taking the next step and working with this awesome organization out of Tanzania called Washika DAO. And they have built some tooling to allow these same kinds of groups or new groups that want to do the same thing to spin up a little DAO that has a shared safe, essentially have shares in that safe, and then be able to both save and then borrow out of that shared fund. And so speaking on like that reputation, part of what we're excited about is now we're going to give these people access to capital, but also a reputation system where they're starting to build reputation not only in their community but on chain. So to the extent they begin to move out of that and try and get loans and things, we foresee a world where everybody starts to have on-chain reputation that may go towards lending and borrowing in the future, similar to like a credit score in the US. And so we're spinning up we're going to be starting with 5 different groups in Tanzania. We're going to seed those accounts with about $1,000 each. And then we're working with a couple of other organizations that we are partially, I mentioned that all of our work today has really been charity. We're really trying to move a step away from that. Like, we're really starting to see that, sure, people love free stuff, don't get me wrong, but also they don't appreciate it as much. And to some extent, like, they would rather pay for it or give something for it. And so we're going to set up these systems where they're a series of like educational like workshops and things like, onboarding into crypto and some basics there, some financial literacy, because we're focused on solar, some information about solar. And so they go through and take these courses, and that will then allow them to earn their first share into this shared savings account. And then after that, they can begin to save some money into that shared account and get more shares and more access to that capital. But that's kind of how we're thinking about seeding these. And so we're really excited about these pilots being really the first time we're doing something besides just using crypto as a funding rails to just transact and move money around. It really is kind of this next step of really like, what are the crypto tools that can really facilitate change in the world? And so we're really excited about that. And then we still have some other projects that will be a little more charitable, that are certainly in our pipeline. We've talked to a lot of different communities that we'd like to support. But then the other piece, and then I'm sure you have questions, and we certainly should make this a back and forth, but we're also working with this awesome new organization out of Nigeria. They go by 2 names, so they go by both Switch Electric and then the Metering Protocol. And so this is this group of 4 amazing founders that have built basically a actual physical hardware that's monitoring solar and then taking all that data onto the blockchain, and then allows people to buy that solar energy using crypto. And so we're going to use that system in some cases where we go into a community that has unreliable access to electricity, or maybe no electricity at all, but they have some funds to pay for the power if they had access. And so we see it as almost like a pay-to-own model where we would go in, fund a solar system, and then use this protocol for them to be able to buy their power from us over the course of maybe 3, 4, 5 years, whatever it takes to pay us back essentially for the cost of the system. A small amount of interest, but we certainly don't want to be profit-seeking in these areas that are struggling so much. But we do see, obviously, there's a certain value of our capital, and so we want to see that, coming back to us, but starting to create this flywheel where we can fund projects, and then the communities can over time own those projects by purchasing the electricity. So between those 2 pilots, we're really excited about sort of the next evolution of the Solar Foundation, and really, like I say, using crypto tools, because that's really where I got into all of this. Is I believe these tools can be amazing coordination tools to really coordinate capital and coordinate humans in new ways, and out of that do good in the world. And so that's maybe the couple minutes on the Solar Foundation.
Wow, that is a lot of stuff. I have so many questions, and one of the questions actually is a question I'm going to ask for my friend Eric, if he's listening to this. Eric is a guy who I did Peace Corps with in Colombia. I was recently in Costa Rica. We were able to hang out for a couple days. I hadn't seen him in, I don't know, 5 or 6 years before that. But he's working on launching a project using with nonprofits, but I meant to say NFTs in Guatemala, and it's going to be like a circular economy, more or less. I'm using that very loosely. He would correct me on that because that's actually not it. But using NFTs to fund wash programs in Guatemala and start to create kind of circular economy is not right. So I wish I could delete that from the from the episode, and maybe I will. But I want to ask you this question because I think this will provide amazing answers and alpha for him. And then I want to come back to all the other things you said, because you've touched upon basically circular crypto economies throughout Africa, and you've also just touched upon basically a way for people to be able to buy their solar panels back to you on chain in like a lease to buy agreement, which is fascinating. But the question I have for you is, you said that over your time getting people with the Solar Foundation, and you listed out a bunch of countries where you've done projects. You said maybe once or twice, or there have been moments where it's been hard to get people into crypto, hard to get people onboarded. Can you talk about those struggles and what you learned? And then also, the story in my head is story in my head is that they have to do with the on-ramp and off-ramps maybe, and how easy or not easy that is for people. Because unless you're in a full-on crypto economy, eventually you may or may not want to turn that into your local fiat for whatever reason, to pay your landlord, to pay the gas meter or whatever it is, to pay for your water, pay your electricity, pay your cable, pay your Wi-Fi. So can you talk to me about specifically some of the pain points you've had in onboarding people, and then also how you've kind of overcome them? And once again, this is a question strictly because I know Eric may listen to this and he'll be like, this is great. John's out there doing the work, using crypto on the ground.
Yeah, and definitely, I mean, with it being a friend of yours, happy to connect, offline with him as well, because it sounds like some synergies in the work. But to answer your question, I would say the first barrier is just if you've got people that all they read is about scams in crypto, or all they've read is the headlines, if you will. And so their initial perception is just like, this is a scam. And I think particularly people in these parts of the world have suffered from so many scams before that they're cautious, and I don't blame them. I think if I wasn't as deep into all of this as I am, and if I was just reading the headlines, I would probably have a similar perspective on everything that's being built. So I think the first hurdle is always like getting that comfort, like, hey, we are a legitimate organization. Hey, here's what we have done before. Here's why we use crypto, and getting them comfortable with, okay, there is like potentially a ton of scams and all sorts of things happening, and there are this like group of people in the world that are trying to use this for good, and that's what we're trying to do. And so I think that's partially relationship building as much as anything, that we build a long relationship with people over time, and so they begin to trust us more, and so then we kind of can get over the, okay, so you use crypto kind of first hurdle. And then I think you pointed exactly to where the second hurdle comes, and it is the off ramp. For one thing, as we work in new countries, every time we have to learn in this country what is legal, what isn't, how do they even off ramp. Oftentimes that's working with other partners or people that we know that are near that region that we can ping and just say, hey, like, we know you're in crypto, like, how do you off ramp when you need to, and getting some of that information. But that the off ramp piece is definitely a challenge for a lot of people. In a lot of countries, they're dealing with governments that are like partially illegalizing crypto, so it's like they can't quite work in crypto, but also there's kind of like this gray area where it's okay. So like a lot of the people I work with in Uganda, for example, like Binance can't be their direct off ramp to their bank, but Binance can set up basically a P2P like service where they can find some hopefully legitimate person that will essentially be the broker and off ramp for them. And especially for a new user, like the challenges of, okay, so you sent me this money and now you want me to find this other person and I have to trust them. And, and even at that, like with a PDP, it's like, you got to kind of wait, did the money come? And then I send my money. And if they send it too soon and it is a scammer, they could lose the money. So there's definitely all those, the on-ramp, off-ramp situation, frankly, across the board is a mess. I think in certain areas, I think, the US, Europe, and a lot of places, there's a lot of tools. You're still going to go through some red tape, some KYC, and the government's watching you, if you will. But at the end of the day, at least it's easier in some places. But a lot of these regions, it is not. And I suspect part of that is these governments know that they have a certain amount of control because they control the currencies. And so they don't want these alternate currencies to be coming in here because they see that they're smart enough to see the potential, and they don't want to offer that service to people. So that's definitely a big challenge. And then even some people that we have on-ramped, we have had folks that have unfortunately then clicked on the wrong thing, connected their wallet to the wrong thing, and lost funds too. So you can sometimes gain that trust just to only lose it because they end up losing funds. And so I think all those combined make it a challenge. But like I say, for the most part, we've been able to overcome it. But we're also, because we're coming from kind of the crypto world, a lot of the people we interact with in communities are people that are at least dabbling in it. So they have some sense of crypto before we even start the relationship. It's more so when we hear about or get connected with somebody that it just has not played with this stuff at all. And so it is sometimes a challenge. I think the biggest unlock that we're seeing right now, at least in Africa, is MiniPay, which is on Cello. So that's a new wallet that's actually integrated in as like a mini app within the Opera browser. So it is becoming a good off ramp for a lot of communities, a lot of places where they can on ramp, off ramp into crypto. And I'm hoping there'll be more of those kinds of solutions as we go. But yeah, that's definitely the biggest challenge.
Yeah, and I said, as I was trying to frame that, I said obviously, and I tried to backtrack, but everyone I talk to, and even people in the United States, when you get blocked out of something and now you're moving from, when Binance.com went down for people in the States, I remember moving all my stuff to, whether it was to a cold storage or I was moving it to Coinbase if I wanted to take some out, it just became a nightmare overnight that I hadn't previously considered that would be a nightmare because I was just so dependent on being like, oh yeah, I could just put my fiat on here, buy on Binance. Because even though Binance UX has always been painful, I think that's been the arbitrage for a long time with Coinbase. Coinbase looks so much sexier, and it's more like the apps you use, like an Uber or an Airbnb or an Instagram. It has like $1 billion of UX into it. But Binance was so simple. And anyway, going on a tangent here, but the on-ramp, off-ramp is definitely a struggle for people. I think Eric will really enjoy that alpha you just gave, and that's honestly why I like to podcast. That's why I like to talk to people like you, which is like, hey, if you go into a new country, you guys all of a sudden are like, hey, we're going to do something in Nicaragua. Well, look at who's in Nicaragua and go talk to them and see how they're doing it, whether it's an influencer or a content creator or another nonprofit that is using crypto in their day-to-day programming. Just talk to them. I think that's really good alpha. Bitcoin Lake, as they call it in Guatemala, already exists. So Eric, make sure you're talking to people at Bitcoin Lake to figure out how they're off ramping and on ramping. I don't think Eric will be using Bitcoin for this particular project. He may be doing some ordinals as part of the project to mix with some of the more Ethereum backed NFTs, but that's just great alpha. Yeah. Let's go.
I think just real quick, the other thing that came to mind is it once you find that maybe person that's already working in that country, already doing this, if you can have them help you, that also sometimes gives you a one-up, that instead of some white dude in the U.S. trying to get somebody to do something, it's like, hey, let me talk to, theoretically your neighbor, this person in Tanzania that can talk you through it. And there's a certain, at least a little more trust that, okay, this is somebody that's like me. And so sometimes that can also help to bridge that trust.
I love that too. I mean, I don't think there's any project in the world that gets off the ground and then lasts without having incredible local buy-in, both probably from the community where the project is happening and also from that country, with that person who's come in to say, hey, I'm also, for example, Guatemalan, let me help facilitate this. And a lot of times it's just jargon. It's literally the phonetic language or the what's the words I'm looking for? Like, the phrasing to be able to create an analogy so people can kind of grasp whatever it is. This is for crypto and also for water projects, for solar, I'm sure. Solar is now something that is so kind of ubiquitous in the developing world as far as like, oh yeah, we'll just throw solar panels on the school or, like you're saying, on the community health center. But I'm sure there was a point where putting solar on the roof, people were like, oh, we don't want to do that. Oh, that's weird. We need to be connected to the grid, So 100% hear that. Let's go and talk about the communities that are going to be using the lending and, the investing and the savings and you're basically investing your money on some level, in the sense that it's not just saving it, because I think maybe on some level you could get some interest back if somebody else were to, right? Would you call it first of all, would you call it an investment? And then second of all, I just want to go on a little bit of a tangent and say that in the 2010 documentary that's called The Inside Job, which is all about the 2008 financial crisis, one of the things that they talk about is the history of banking and how banking back in the early 20th century was like, okay, John and Jarrett have a bank and they have $400,000 in their bank. And so somebody would come to us and say, hey, we want to take a loan. We want to start this business. We would do unbelievable due diligence because it was our money, right? If you want to get a mortgage, that's great. You want to do it through our bank, that's great. Let's look at that. And you want to take a mortgage out because it's like 1910 or whatever, and you want it to be $30,000 and we have $400,000 in our bank, great. Let us look over all your credentials. Let us look at your credit score. Let us take into account your financial outlook. And the reason why I say this is because then you fast forward to 2008, and even today, the bankers are not on the hook. They have apps. It's not their money, right? Yep. So they're so far removed from like feeling the financial responsibility to administer and handle money well that the system is totally flawed, which is probably why at some level you and I are in crypto.
Right.
Now, going back to these communities in Africa, it's so amazing. If there's $2,000 or $3,000 in this, there's 30 or 40 people. They are going to look out to who they loan to, who they let into this system and actually take money out of on a different level. And I guess I kind of want to go with one thing, is it investing, as I already asked. And then the second one was going to be talk more about the on-chain reputation. I just think this is so massive. Just like we have our reputations on X or on social media, if you mess that up, people don't forget. Yep. And if you mess up your on-chain, you're going to have to start again, which you could do, but it may take you a long time. So talk about, first of all, are people seeing it as kind of an investment? And then also, what is the conversation that's happening, at least in your circles, around on-chain financial reputation? Because I think that is going to totally transform the way people think about finance and local finance in the global South.
Yeah, I think I would probably, maybe as much for legal reasons as anything, not call it an investment. But I think that there is, typically in these saving circles, there is like a small interest. So that is typically baked into it. But I don't know that they so much see it as maybe an investment as just sort of almost a service fee. Like, you're borrowing the money, we're running this thing, so you're going to pay a little bit more and help, and as much as anything, help to grow that savings account that we all share. And so maybe some see it as that, but I don't think it's also like the kinds of returns where you're going to like make money. The way that these would be structured is, say that the shares are $20. So you save $20 and you buy another share and put it into the bank account. The way that I understand it, it is a really great question that I should actually talk to these folks about. I think when and if you ever decide to exit, that it still is 20. So you're gonna sell your shares back in, and you're gonna get your $20 back. But I don't believe that that's accruing like interest, and that the value of your shares are growing. It's like the value of the shared account is growing, and so there's more access to capital for you as being a part of this. But I don't think that it's structured in a way where they're actually making money by investing in the saving circle, if you will. From our perspective, we look to likely long-term, because they are going to earn little bits of interest, that maybe over a long period of time, they're sort of paying us back that initial lump sum that we put in. We're still figuring out some of those details, but even there, we don't see it as much as an investment as we want to keep funds flowing. If we can bootstrap this thing and set it up, and then in 10 years time we can get that money back, that means we can do another one. So it isn't so much that we as an organization even really want to make the money, as we just want to keep that funding flowing. We recognize that the more of these sort of flywheels we can create within our treasury and within the actions that we take, the more impact we can have long term. So that's really like our North Star. I do imagine you could set this up more as an investment as well. At that point, you're probably more your traditional. Well, traditional is probably not the right word for any DAO, but you're more of a investment DAO at that point. I think we're still due for the next wave of DAOs and where quote DAOs go long term, but your DAOs of 2020, 2021 that we're all spinning up, folks that were buying NFTs together or investing in companies together, there's a lot of those out there that, the Flamingo DAOs of the world with massive NFT collections, folks like Orange DAO that's a spin out from YC that is investing in companies together. I think those kinds of investment structures are certainly there for the taking, but in the context of these saving circles, we wouldn't necessarily look at it that way.
Yeah, and that's good. I assumed, it's called a saving circle, but whenever I talk to anyone about financial literacy, I'm like, look, there's only 4 things you can do with a dollar bill. You can spend it, you can save it, you can invest it, you can destroy it. The last one apparently I think is against the quote law, and I'll use quotes because the laws today in the United States seem flimsy.
Yep.
And then most people are not going to save it because they're like, well, it's fiat currency, so in a year I know I can buy less. So then they're really stuck with, I'm going to spend it or invest it, and most people don't know how to invest their money, so then they end up just spending it because they take the other side of YOLO, which is like, I'm going to die tomorrow, so I got to buy a Lambo today. Exactly. So I just wanted to kind of like suss that out. And then, the second part was building on the on-chain reputation, because I just think that that's amazing. My wealthiest friends, they've told me, they're like, yeah, having a credit score is cool, but if you have a lot of money, you don't care. Right. And I really do start to believe what they say, which is like, if you have enough money at some point, let's say you have 10 million, 20 million liquid, you don't actually care about most of the games that people are playing with their money. You don't care about having a job so you can get healthcare, because you can honestly cover everything or buy your own private healthcare that's cheaper and make sure it's set up. You don't care that you're going to get a better rate on your mortgage because you could just go buy the house outright. And so when I think of like getting outside of our system, one of the systems in the US at least, and this is going to be a US comment, right? And we're talking about the Global South, is the idea of the credit system. There's a credit system where I'm in Colombia as well. And it's funny because I'm a Colombian citizen, but my credit is like, I like don't exist, because all the things that I do in the traditional finance system are through my US identity, I guess you could say. So I'm very fascinated about this idea of the on-chain reputation, because that could be global. And so someone could be in Colombia partaking in this local savings circle, building up their on-chain reputation, or their on-chain basically credit. Are they going to pay back the money they say they will in the time frame that they set out? Yeah. And as they outgrow this local savings circle, they could go to the one in Peru, and then they could tap in, and people would look on chain and be like, wow, yeah, you know what? This person always pays back. They pay back the 2 or 3% interest we're asking. So can you, first of all, talk about what that looks like? How new is this idea? And have you seen any success stories from this already, or are we too early in the game?
I think we're still pretty early in the game. I think we're starting to see some projects that are starting to emerge that are trying to tackle it. But yeah, I think we're still a little early in the game that we would have any sort of universal system. I think like what we're doing is like creating these little pieces of reputation for these, 50 people in a savings circle that likely will, because it's on chain, then can be tied to other reputation systems as they emerge. I think the general trend that I'm seeing, or at least where I think that reputation systems go long term, is that it is pulling data from all over the place. So you've been in one of these savings circles, great. You get that, adds a little to your reputation score. You've been on, some DeFi platform, and you've shown to not lose all your money, you paying back your loans, whatever that is, like that's giving you a bump. Maybe people value some other thing. Maybe you're a part of X organization, and so you hold their NFT or their whatever, and maybe people respect that, so maybe there's a +1 for that. So I think it's really is like this aggregation of all the actions that we take on chain that then starts to develop this overarching reputation on chain for all of us. I don't think anybody's quite cracked the code on like how to pull it all together yet. We're seeing little bits with, the folks at Gitcoin had a project called Passport that they then spun out, and it was doing a little of that. And it was more about maybe partially reputation, but partially just knowing like that you're human. So that's really what they were tackling, is more like in their grant rounds that they run, like they really are concerned about, Sybil attacks, where somebody is just spinning up 100 wallets and doing X actions with those things, and it's one person with 100 accounts and trying to pretend like they're 100 people. At the end of the day, then they're developing almost these like reputation scores for each wallet, looking at how long you've been in chain, how many transactions you've had, do you hold Ethereum, or do you hold, it's EVM based, so it's not Bitcoin, but in theory the same with Bitcoin, or have you maybe done some KYC service that has some connection on chain and that's pulling in some points? And so it's like all these different actions that they value enough to say, okay, if you did all those things, we're going to assume this wallet is a human. And so I think that that's where we're starting to see it. And I think a lot of people are looking at it more as almost a KYC, an alternative to KYC, like know you're human, like versus like know you're know your customer, like just knowing that you're actually a unique human, that's sort of what a lot of people are solving for. But I think that evolves into these reputation systems that will give us these, like you say, these credit score-esque kind of things on chain, where people can see all that you've done, and your reputation is sitting right there. So I think as that all gets aggregated together, it's really going to unlock a lot of potential for you think about it, like even DeFi, like part of the reason that so many people can't do DeFi is they don't have any collateral. So what does it look like to have under collateralized loans? Well, you got to have some kind of reputation system on top of that if you're going to lend money and not have some sort of collateral. So that sort of begins to unlock access to DeFi tools for a much broader group of people, and even all of us that need to lend and borrow money. Like that's I think it's going to open up more possibilities in that space.
One of the things in that space that I'm very fascinated by is who's going to win, who's going to be first to the egg, if you will. Like, and I just kind of quoted Ready Player One, but it's just kind of like, who's going to win this race? Because now I see two people. I see the DeFi people who are in decentralized finance, who are living on X anonymously, who I know, and they're trying to win this race. They're trying to get there, and like you said, not only have a layer where you can prove collateral and you can put it in a multi-sig or however you're going to do that, and then you also have this trust layer in a world where that's all about verifying and not trusting, but where you're verifying that the person has this history of credit, of taking loans and paying back. Who's going to win? The nerds on the internet like you and myself, or Bank of America, Chase, and Wells Fargo? Because over the last even month, Jerome Powell was up and he was talking when they were talking about the interest rates. And he's like, yeah, I don't see a reason why banks can't do crypto if they can handle the risks. That was obviously a big if, because they need to wrap their head around what that looks like. But I actually think, and this is the most non-Bitcoin crypto thing I could probably say, and I don't care if I'm getting killed for it, I think the TradFi wins because they have the brands that people trust more on a mass level. And so if they have a product that says you can put your Ethereum and lock it up for a year and you can get this much back on it, and then you have pay 10% on that, I think they're going to win. And I don't know necessarily whether that's a good thing or a bad thing. I think it's not something, though, that was part of our roadmap if this were an NFT, right? On the journey we're all going on. I don't think that was on the roadmap that Bank of America was going to beat the cypherpunks to the egg, or to win it. Do you feel the same? Like, where are you? Just because I feel like TradFi is coming, and I feel like they're already here. When you look at the amount of money that goes into the ETFs and the amount of money that now just Fidelity and BlackRock hold and MicroStrategy hold in just Bitcoin. But I do feel like when it comes to DeFi, I think you're going to have better DeFi products through your Wells Fargo app, through your Chase app, through your Bank of America app, before you have it super well done in your MetaMask.
I would say I definitely lean that way, at least in the, like, how are the masses going to use crypto? Like, I just don't know if we can get there fast enough that we can get people trusting and having the knowledge they need to self-custody their funds and not have a bank. Like, I think that's part of it. Like, people like the security of a bank, and if you own your own keys, then you own the fate of your money at the end of the day. And maybe eventually there's some sort of insurance and things like that that can back up some of that and make that come along. But at the end of the day, like, people want to trust that if something goes wrong, there's a backstop, and there isn't, and, I think the dreamers that started all this and a lot of the people that have been in it for a while, like, yeah, we all want to see like a new system form and not just a new part of the old system. But I mean, even at $3.5 trillion, we're still like just a blip on the map compared to these large institutions. And so I don't know how we compete long term against them. I think the only way that it goes the other way is if there is like more of a massive collapse in some case. But even then, like, are the governments going to come in and stand them back up just like they did in 2008? Likely so. And so I think it's partly the banks and the TradFi, but I think it's almost the government behind them that's going to drive that as much as anything. Like, the government's going to continue to make it difficult for all of us that want to live a bankless life in crypto. They're going to make it as hard as possible for us because they want us to have their dollars at the end of the day, and they want us to use their institutions, even if there is some separation between the government and TradFi. At the end of the day, they're certainly intertwined in a very big way. And like you say, they have been here for a while. Like, I've got a friend that works at Fidelity, and those people have been mining Ethereum and Bitcoin for a long time before the ETFs. Like, this isn't like the ETFs are the first quote official like entry, but these folks have been playing. They've been here, and I think we're fooling ourselves if we think that $3.5 trillion is all just like the public, all retail, if you will. Like all that money didn't come in here without some banks like dumping some money in here. And so I think the cool thing, maybe for those that would want to, crucify either of us for saying those kinds of things, like, at the end of the day, I do think that because this is decentralized borderless technology, at the end of the day, we can still choose and have that choice that, like, I don't want to participate in that. Most of retail may want to go to their Fidelity and do their DeFi there, but you and I have the autonomy to decide. And so I think that that's what's amazing about this system, is that, yes, it brings in all this money, and yes, they maybe capture value and they capture like parts of crypto, but I don't think they can capture it all, like, at this point, because because of the nature of the system, they can't actually centralize it all into TradFi. Like, they can centralize a lot of customer base and a lot of money into it, but they can't like control it and gate it the way that they can gate the current system. And so I think that that's like the opening for all of us. Like, like, we still have that freedom, and they can make it hard for us, and maybe we got to move at some point or whatever we got to do to like continue to have that freedom. But I don't think they can really take it away.
Yeah, absolutely not. I think the freedom of choice in this space is absolutely amazing. If you do want to go with Fidelity and digital assets, they know what they're talking about. They have people who are deep in crypto. They hire really well there. Like you said, they have been in this for a long time. Cathie Wood bought Bitcoin, I think, the first time in 2015 and started to talk about it. Raoul Pal, the macro investor, 2012, 2013, after Europe blew up in the butterfly effect that happened from 2008 stateside. So there are people who are part of the more traditional finance that are now more in DeFi crypto, but they have been around this for a long, long time. We could probably continue down that path, but I want to go back to the Solar Foundation, and I want to talk about, we talked about the saving circles, which is amazing. Can you remind me, and I don't know why I don't remember this,
Okay.
What was the other, you had the other big...
the other piece is just this idea of like a pay to own, or however you want to look at a leased solar system, that kind of like arrangement, I think is the other piece. Yeah,
right. Okay, exactly. And my question there was, is that on chain? The story in my head is it's absolutely on chain. Okay, so because it's on chain, this gives me the opportunity to ask the other question, which is kind of for Eric and also for myself and for anyone listening who's trying to wrap their head around how to do good with crypto on the ground. How do you deal with the ownership of wallets? Here's the example. You and I, we go and we start a program in Tanzania, and we've got 50 beneficiaries. And the beneficiaries, we've put them through the class. We've taught them everything they need to know about crypto. They're feeling crypto fluent. They're on X. They're on YouTube. They're digesting all the information. They're in Discords. They're fully fluent in crypto now. It's taken 6 months to 12 months. We've done free night schools. They're up on it. We start dispersing them $10 a week to help out, because they basically, our nonprofit is where if they donate their time playing with kids after school, playing soccer with kids after school, I'm making this all up, playing with soccer with kids after school, we give them 10 USDC on base, and they're using the Coinbase wallet. So that way they own their keys. We give them to that every week. So every month they make about 40 USD. I don't know if that's a lot for them, but it's something, because they were going to go play soccer anyways after school. And we're just basically incentivizing them because they're the seniors. And when they play with everyone else, it keeps everyone involved, and there's some social utility impact here. I'm trying to get to the point of, how do you deal with the ownership of wallets? Because I think humans are humans. We are inherently flawed when it comes to keeping track of things. So out of the 50 seniors who we get to come play with the freshmen and the middle school kids, and this is the program we have, and this is after school football, program, soccer for the people who are stateside. 3 of the students lose their keys, and they went on a this is very, very, very Bitcoiny, but they went on a boat trip and their phones fell in the ocean, right? And they lost their private keys. So now you have 3 of the students saying, "Hey, John, I still want to participate, but I actually had $100 in there. How can I reconcile this?" And you obviously say, "Hey, you know what? You guys knew you had to watch out for your own keys, et cetera, et cetera, et cetera." This is something that I've kind of called out to Eric in the project he's hoping to get off the ground soon in Guatemala. And it's just like, I think it's really difficult to assume that if you give 50 beneficiaries, as the example, all access to their own wallets, and you set them up and they're using Coinbase Wallet or MetaMask or whatever wallet they're using, there's a billion good wallets out there. Yeah. Some of them, just because of it's happened to the most senior people I know in crypto. The people who have taught this have lost their keys. Right. How do you solve for that? So that way the human error doesn't negatively impact the overall project. Because now those 3 seniors in this hypothetical are like, "Man, we lost all this money. We were saving up. I had some of it even staked. I bought some Ethereum and I staked the Ethereum because I could do an easy swap. I'm really getting into this." How do you ensure that human error on the individual level doesn't negatively affect the larger group dynamic of projects?
Yeah, and I mean, part of the answer is what you said. Like, I'm sorry you just learned a hard lesson. Now we need to start again. So there's that piece, and it has been like, we've worked with people that have raised, whether it's not so much directly from us. We haven't had too much where people lost like money that we directly sent them for like a solar project, but we have definitely had people that we are working with on solar project that in turn have lost money. We had a guy, he didn't even know that he'd clicked on something, and then he got a small grant from somebody, and all of a sudden it's like the money went in and the money went out, and then he's pinging me like, "What happened?" And I'm looking at Etherscan and going, I don't know where the money went, but if you didn't spend it, you clicked on something wrong, and that person was just sitting there waiting for the money to flow in, and they took it. So I think that there is a certain amount of that, and you hope that isn't a very expensive lesson, and they will probably be that much better the next time. But that isn't always the answer. So I think that maybe the answer I would give, at least right now, is that I think, and I haven't played around with them as much, probably something I should spend a little more time, but I think some of the wallets, like Rabby comes to mind, and I haven't played with that one yet, but I know that it has some social recovery features, so that if you do lose access, that you can have, through other social means, a backup, if you will, a backup door. And now that comes with trade-offs. Those of us that are deep in this don't want to maybe do that, because you don't want to give somebody else potential access or some backdoor, if you will, like that maybe has some security risks. But maybe in these cases, it might be part of the solution is some of these wallets that have some better recovery methods. And then we also see it's sort of layers of onboarding. So with even looking at you have kind of all these like account abstractions that are coming. So your privies, and I know there's a few others that are out there now where you can essentially spin up a wallet, go to a site and log in with your email, and under the hood, you just created a wallet. So something like that for people maybe initially is a great starting place. Like, okay, we're going to give you, like you say, $40 a month. It's not a huge amount of money. Maybe for them, it's a lot more than me or you, but it's still not like, you're not sitting with $1 million in this account abstraction wallet, but it's sort of like a layers. It's like, okay, we start with that. And as you get more comfortable now, then maybe we move to the Rabby, which is like the in-between, where it's like you have more control, but there's a little bit of a backup. And then eventually it's like, okay, now you're going to move to some fully self-custodied wallet where it's up to you. And I think that through education, it can be just sort of those steps like, okay, I feel comfortable giving you this account abstracted wallet because there's going to be $40 a month and maybe a few $100s in there. And if you do lose it, it's probably not the absolute end of the world. But then once I know that I've gave you a $2,000 grant, I may now suggest like, okay, it's feeling like it's time for you to like move to the next level and have your keys and have some more control. So I think a lot of it does come down to education, and then there is going to be that human factor that's always going to be there. And so I think there's some of these wallets that are beginning to provide us some solutions to that. And somebody out there might say, no, I know all about all the risks there. Like I say, I haven't dug in as much as I probably should, thinking about this, but, mostly for us, it's just been like, I'm sorry, you just learned a hard lesson and I feel terrible for you. And if we can make, oftentimes, honestly, we try to make people whole if we can. You can't do that every time, but, you got some partner that's expecting $500 to go do X, and it's like, oh, now I can't pay for food for the school. It's like, okay, let's see if we can find you $500. Like we recognize that actually is a lot of money for you right now, but we can't always do that. So it's sort of we provide a little backup where we can, because that's the kind of work we do. But there's also times where it's like, I'm so sorry that you lost your money. You need to be better, and let me help you and educate you more, because you maybe didn't fully get the whole picture. And but it is still a little bit of a crazy world out there. You can click on the wrong thing and lose your money. Like you say, some people that are very sophisticated have fallen into scams. So
yeah, some of the most sophisticated people I know have lost their keys and or fallen into scams and or both. And that's just kind of like, if you play, I'm trying to look for the analogy, but it's like if you play, I don't know, hockey long enough, you're going to get hit with the puck. Like that's just, the longer you're on the ice, the more likely it is to happen. And so there are enough scams, and there are enough good, amazing scams. In fact, on this podcast, or on More Than Blockchain, which is still this podcast, I actually outlined how I almost got scammed by Coinbase, even though I knew it was a scam. I was like highly aware, but they almost had me. The social engineering was so good that I was like, wait. Is someone in my account? So it's a wild world out there. Yeah. Let's shift from the Solar Foundation. And if we could, I want to talk about this other project that you are a part of, the Climate Coordination Network. Yeah. I've been on the website. The website is really quite great because it just has a map and what they're doing and the impact. It has a database of, a spreadsheet essentially of this is the amount we've been able to do. And then it has a very brief description of what's going on. So I'd love for you to maybe add some more color to that and kind of talk about what that project is, and then where and if it dovetails with the Solar Foundation.
Yeah, so the Climate Coordination Network has been around as an organization for about 1.5 years, but the group that formed it has been working for maybe 3.5 years, give or take. Okay. And our primary purpose has been raising funds and distributing grants to, we'll call them crypto for good, but mostly in the climate realm projects. So people that are, maybe their project is planting trees and they're somehow tokenizing that on chain, or people working in the oceans. We've got a project that we worked with that's working on some new tech for growing coral that then is tied back to the blockchain, and some NFTs and some interesting things. We've got folks like the one, I guess, connection, like we have given a little bit of funds to the metering protocol, the folks that are metering the solar, that like they're both for their hardware and their software. So we've given some funding to them. So all of these kinds, that probably gives the listeners a flavor of the kinds of things that we've funded. But it's mainly is like, if you've got some crypto-based solution that can help with the fight against climate change and the climate crisis, which, hopefully all your listeners are on board, but literally one of, if not the most, like, challenging things that we face as humanity. Like this is the real deal, despite what you may or may not be reading out there. Like, this is real, and most importantly, it's affecting like the people that, partially where the Solar Foundation, part of why we work in parts of the world where we do is we see that these people are the ones that are seeing the effects already today, and it's only getting worse, and they didn't cause the problem. So we don't need to get into a deep climate change conversation, but it definitely is something I'm very passionate about, and our organization is. So the Climate Coordination Network, or CCN, is we've distributed about $4.5 million of funding in the last 3.5 years. About $1 million of that has been crowdfunding, and then about the remainder of the $3.5 million has been money that we've raised from third parties to give away. And so we funded, a lot of really great early stage startups mostly. I would say I'm hoping, and part of our mission really as we move into this next year and the next few years is really to help some of these projects get from 0 to 1. Sort of for those listeners that aren't familiar, there's this small set of crypto that we refer to as like refi at times, like regenerative finance or the regens. There's sort of a catchphrase of turning degens into regen, the degen to regen pipeline, if you will, of getting the degens out there to start to realize they could also be doing some good in the world. And part of the reason why that's been challenging is these projects are still young, and a lot of them aren't necessarily like the place you're going to go make 1,000% yield in a DeFi pool. Like that's not the kind of stuff we're doing. But at the same time, we are seeing a lot of people developing projects that likely will be some good investments in the future, and so we hope to see that. So we really are trying to take some of these projects and give them all the resources we can between funding and education to take them to the next level, to really break out into the broader crypto sphere, so that the listeners out there, that this is the first time you've ever heard that there's this group of people trying to use this technology for good in the world. We are out there, and it's but I go into plenty of spaces, rooms, etc., that are crypto folks that are like, what are you talking about? Like, I want to talk about Fartcoin, and I'm like, cool, milady. And maybe I dropped you a couple links and things, but the real exciting thing that we've got going on right now is we just secured a partnership with Octant, and Octant is basically a organization that has set up to fund public goods, and so they've distributed about $4 million a year for the last year and a half. So I think there's $6 or $7 million distributed so far on their side. They do a quarterly grant cycle where they distribute this funding. And taking it a little back in history, for those who've been around for a while, they actually have a connection to the Golem project. And so there was it was one of the biggest, if not the biggest, ICOs at the time in like 2017 of this Golem Foundation. And they're like a decentralized compute project, and that's really where they were originally based, and the things that they're doing. And they're still doing some of that work. But some of the people from that community were loud and noisy through all the various times about like, hey, are you guys doing anything with this project? And making a lot of noise. And over time came up with this idea with, hey, you guys still have this massive treasury of ETH. Like, you guys raised a shit ton of ETH. I wish I had the number off the top of my head, but they're just a massive amount of ETH into this ICO. What if you gifted us the yield from 100,000 of that ETH? And so what they were able to do with the Golem Foundation is set up this secondary project, Octant, where they have 100,000 ETH staked, and they are doing a lot of decentralized staking, and they're really leading in terms of staking technology and ways that they're doing that. But they have this 100,000 ETH that's staked, and so that's generating that $4 million a year of yield that they're giving away. And the way that they have done it until this coming round, and we'll get to that in just a second, which is a climate focused round, is it's been projects, everything from open source software, maybe even tools that you use every day, like a Tor. Tor's been in multiple times in multiple rounds. And they branched out a little bit, but it's been a lot of more open source software in sort of the public goods when we talk about the idea of public goods, that, software, all the infrastructure that sits underneath everything we use every day is oftentimes not rewarded. You've got all these folks that are maintaining, GitHub repos for tools that are underpinning the entire internet. And for the most part, because they are just, open source software, they have never been able to make a lot of money doing that. And so in sort of this public good funding sphere, there's been a lot of push to like, how do we begin to fund these people in a real way so they keep building on these tools? Because if it all falls apart, they just get tired of it one day, like the internet is going to fall apart. And people don't realize that, but there is some core things that are just, a small community of people that just are nerds and love this stuff that are maintaining this stuff, but they have not been rewarded. So flash forward to this upcoming round, they're transitioning and going to test out a themed round. So all these rounds, like I say, have been kind of a mix of different kinds of projects, and their thesis they want to check out now is what if we have all the projects be of one theme, and then how will people evaluate them against each other compared to when it's a, if you got an open source software project and, Tor, and you've got, several different things. It's like, how do you rank those or rate those? Because the other thing that happens is that outside of that 100,000 ETH at stake, now if you hold GLM, so any listeners out there that hold GLM and maybe you got it in an old wallet or something, haven't even thought about it, you can actually go into their platform and lock up your GLM. And what you're doing when you lock up your GLM is you start to earn rewards. So you actually, that yield from that 100,000 comes back to the folks, a portion of that comes back to the folks that have GLM staked or locked into their system. And what's really unique about that is that, so on a quarterly basis then is a point where you have two choices. Well, I guess three choices. One, you could just say the yield that I made from locking my GLM, I'm going to take it because I want the money. Cool. It's your money. You could say, I'm going to take, all that money, and because there's this grant round, I'm going to actually give it to these 20, 30 projects that are in the round. So I love Tor. I use it every day. I'm going to take part that yield that I've been earning for the last 3 months. I'm going to donate it to Tor. And during that like round, if you will, so they have this funding round every quarter, the way that they distribute that funding is based on people voting for those projects with their dollars, but it's with this yield. So it's kind of free money. So instead of like pulling money out of your pocket and giving it to an organization, you got basically this free money that you've been earning in yield that you can then donate or vote for these projects essentially. And then the third option, just because I mentioned that, it would be maybe it's half and half. Maybe you're like, I'm going to take half the yield and then half of it I'm going to give away. It's your money. You can do what you want. But this is a cool opportunity for folks to lock up that GLM and earn a reward from it. And depending on the economics of all that, that could be, beneficial compared to even owning ETH and staking it, something like that.
What's the APY on that, more or less?
I think their overall pool is like 5-ish%, maybe a little more, maybe a little less. I think they're not juicing it too much because it needs to be as safe as possible, but somewhere in there.
Yeah, anything that's over 10, I don't believe in. And I tell
Right.
people to stay away. Anything at this point. I'm like, that's not, do the math. It's not sustainable. It's out in 6 months, 8 months, 10 months. Going back to getting burned really bad on Magic Wonderland. That was
right.
Ooh, lost some coin there.
Yeah. And so let me see, wrap the last little bit of the conversation. So the last piece of the puzzle is they use to then distribute. So that basically they have this $1 million matching pool every quarter they're giving away. You and I have locked our GLM and we have this reward. So we vote for Tor, we vote for X other open source software, etc. And then they match that out of that $1 million. So they're allocating that $1 million to those projects according to the way that we vote with our dollars for those projects. And they use what's called quadratic funding, which is originally a paper written by Vitalik. Gitcoin, for any of the listeners out there, really the ones that pioneered that initially. Now a lot of people are using it. But the idea of it is it's a way to crowdsource from the community what's important to them. And so if project A has 1,000 people that give them $1 and project B has one person that gives them $1,000, at the end of the round, we look and we say, well, 1,000 people said this is awesome. They only gave $1 each, but they all signaled like this project is so important to our community. It really needs the funding versus the one guy that had the one rich friend that gave him $1,000. Well, the community obviously is not as interested in that. And so the project with these 1,000 little donors is going to get a much larger portion of that $1 million than the project that has just one donor and $1,000. So yeah, that's kind of how that works. And that then maybe the very last piece, and then I'm sure you have questions, but the very last piece is, so we have this climate round that's going to happen in April. That'll be their next quarterly funding cycle, and the Climate Coordination Network is going to be the round operator, if you will. So we are doing all of the application process review to evaluate these different climate projects to actually be in that round to receive that $1 million of funding, or a portion of that $1 million of funding. So we're really excited about this next unlock to really be bringing more funding to projects, but also that because we're constraining it down to a smaller set of projects, we're really trying to pick the best of the best that we really think can be those projects that go from that 0 to 1, that can really break through to the broader crypto ecosystem, break through the broader climate movement outside of crypto and the world at large. Like, can we really take a few of these projects and go make a big splash by providing them with funding and then other support over the course of the next year, say? Yeah,
that quadratic funding one, I think you may have actually been the first one to kind of talk to me about it with Gitcoin. That was fascinating because it's the solution to Citizens United in the United States, where you now just have billionaires putting billionaires in office and then making rules for billionaires. So it'd be much better if it were the other way around, where the 1,000 individual votes cancel out the $1,000 donor. Let's see. You've just said so many things. We've talked about the well, first of all, the 100,000 Ethereum, for anyone listening, is 200 right now at current value, is $263 million that is locked up. And then the Octan's the ones who's getting, Octan's getting the 4 million. Basically, it's like a dividend. If you're coming from TradFi and you're trying to wrap your head around any of this staking, I'm always like, it's just a dividend. You own Coca-Cola and they're going to pay you at the end of the year, whatever the APY is. That's the way I think of staking, or at least I try to explain it. What is the feeling right now? And I do want to ask you this because today's February 8th. This will be coming out early this next week. It's going to be coming out on Tuesday the 11th. What is the feeling for you and other people that are in the doing good world, in the international development world, in the world of using blockchain and crypto to do good, of what's happening right now? Because we're in the midst of USAID, which has been a foundation and a backbone of so many nonprofits and so many NGOs and so many INGOs, and it's getting gutted. Yep. It is getting put to bed. And a lot of things I see on X are just not true. And I was reading something the other day. There's just so much fake news around it. And Doge, the Department of Government Efficiency, that's I thought was absolutely a meme, turned from Elon, and I think Vivek was supposed to be part of that, but I think he's like stepped away from that, which is probably better for him.
Right.
But what's your feeling, man? Because I'll just tell you on my end, it's I'm tired.
Yeah.
So yeah,
I hear you there. I mean, I think for anyone out there that's like, well, yeah, good riddance. You're reading whatever headlines that this is a bad organization or doing bad things. Like, it's a government organization. Is there inefficiencies? Of course there is. There's inefficiencies in every part of the government. And so I don't have a problem with fixing efficiencies. But to shut down a program like this is going to have catastrophic effects on people around the world that are doing great work. People that, whether it's, you mentioned your friend with WASH programs, whether it's funding WASH programs or healthcare programs, whether it's funding vaccines, whether it's funding, clean water. There's the list goes on and on where this funding is going, but these people rely on that funding. And there's not going to be like an alternative immediately. Like, they will have to stand up and figure things out over the coming, months, years and longer to figure out how they're going to fund these programs. And honestly, a lot of programs are going to shut down. A lot of people are going to suffer. And, yes, it probably isn't mostly people in the U.S., though I'm sure some USAID money goes to programs within the U.S., but at the end of the day, the people are going to suffer around the world. And, I think it's going to be devastating for a lot of initiatives that are really, helping so many people. And I think at the same time, what it means to me is that some of my core thesis and why I do all this work is coming true. Like, the governments aren't coming to save us. The governments aren't going to fix our problems. They actually aren't going to work for us ever. They just care about themselves and maybe big corporations and TradFi and all the things we discussed earlier, but they don't care about the everyday person. I don't care who you voted for at the end of the day. Neither one of them give a shit about you. Like, that's the cold, hard truth. And so, my thesis from the beginning of this is like, here's this new system where we can actually begin to coordinate in a way that we can start to solve these problems ourselves. And, right now with $3.5 trillion in the market, like, that's not enough to step in and be the USAID. That's the reality of it. At some point our market is that much bigger, and maybe we someday, and I hope someday, can be that USAID. Like, I hope that one day we are the aid people are looking for, is people like the Climate Coordination Network and people that are really seeing that this technology can do amazing work in the world and solving for the world's problems that we all suffer with. Because, just on like it's not even philosophical note, like, science proves it. We're all literally connected. We're all literally connected. Every living being on this planet is literally connected. And so when there's people that are starving, when there's people that are drinking dirty water, when there's people without health care, like, those are human beings that in the bigger system of the universe are connected to you. And so even if you don't see directly that impact, it has an impact on us as humanity. And so, I think we may wrap here, but we can hopefully do a part 2 here, even in the coming days, to get some more stuff on wax, if you will. But, my big thing, and I may have even mentioned this last time because I have been talking about it for a while, but one of the concepts that I'm trying to meme into existence is kind of this idea of like an upside down funnel. Like, when you think about USAID or other aid programs in the world, yes, there are inefficiencies. And the problem is right now the funnel is up normal side. Like, the big end is where the money goes and the small end is where it drips out the bottom and does good in the world. Like, yes, we all recognize there's inefficiencies. And so my meme or my takeaway is like, what happens if we actually flip that funnel around? And the way that we do that is we use these crypto mechanisms and crypto rails to actually coordinate capital from the places where it is to the places where it needs to go in a more efficient way, so that we can actually turn that thing upside down and we can go to the big donors, the big impact people, the people with all the money, because the money is not the problem anymore. It probably never has been, but the money is not the problem. It's just coordinating it to where it needs to go to solve these problems. So if we flip this funnel upside down, we actually say, hey, all you people with all the money, put your money in this little hole right here, and I can show you all the systems in a transparent way where that money flows exactly where it needs to go. You want to support clean water in the world? You put it in here, and I can show you transparently, verifiably, all of the people that it impacted in a very efficient manner. And we don't need all those middlemen in between. Like, you just put it in the system and it's going to go where it needs to go. And that's like my big dream for where we're headed with using this technology to solve the world's problems. Like, we can play in the casino all we want. And I know most people with money in this system are using it as a casino, but at the end of the day, the core infrastructure that we're built here has so much potential to solve the world's problems and may be our only hope, frankly, as far as I'm concerned. That's why I'm in this thing full time. Like, I could still be, my background's in solar energy. I could go be some executive at a solar company, be making a lot more money than I am now, with a lot more benefits and freedom, and well, maybe not freedom actually, but, freedom of my time, maybe, because crypto is 24/7. So that's probably the freedom that I would gain is a 40-hour week instead of a never ending week. But at the end of the day, like, that's what's possible, I think, in crypto and these tools and where we need to go. And so I think that long term is the answer to USAID and all these programs start going away. But unfortunately, a lot of people are going to suffer between here and there.
I'm going to close this out, but just know that I thought it would take 15 to 20 years. And then what Mercy Corps, for example, just because I was working there, honestly, the last time that we spoke, I thought Mercy Corps, I think they have like 6,000 people around the world. I thought maybe it would be around 500 around the world. And it would just be totally one of those things where you donate to them because you trust their brand. And then they transparently on the blockchain say, this is going to go to the WASH program in Nicaragua. This is going to go to the after school program in Tanzania. This is going to go to the literacy program in Vietnam. And you can just see it on screen. So you don't need all of these people that make up the thing. I thought that would take 15 years. With what is happening at USAID right now and what's also happening in crypto, maybe it happens in the next 3 to 5. I do want to log off you or sign off. I know you need to go. I want you to stay on after I do the sign off, because I want to schedule a part 2, because we can't leave it like this. But if you're listening to this, please go ahead, subscribe. If you're listening to this on YouTube, subscribe. Listen to some podcast platform, please subscribe. Make sure you're following us on social media at Future Signal Pod. I'm going to go ahead and leave all of the links for Jon below in the link description. And there will be an episode 2, which is the first time I've actually done this back to back. It's going to be exciting. So stay tuned to that. Jon, thank you so much. Hang on the line. Let's schedule a next one. But yeah, thank you so much for hopping on today.
Sounds great. I really appreciate the time and appreciate you having me.